Michael Burry bets against AI stocks, Nvidia and Palantir. What if the man who predicted the 2008 financial crash is once again sounding the alarm? This time on AI. Michael Burry, the legendary hedge fund manager portrayed in The Big Short, has made a stunning move. His firm, Scion Asset Management, is betting nearly $1 billion against two of the hottest tech names on the market, Nvidia and Palantir. That's right, while everyone else seems to be riding the AI wave, Burry is taking the opposite side of the trade, and history tells us when Burry acts, Wall Street listens. You're watching Big Breaking Wire. Let's break this down. Who is Michael Burry? Michael Burry isn't your typical investor. He's the contrarian who famously foresaw the housing market collapse in 2008, earning billions when others were blindsided. Known for his deep value mindset and obsession with data, Burry's investment moves often challenge mainstream narratives. And now, he's zeroing in on what he believes could be the next major market bubble: artificial intelligence. What did he do now? According to fresh regulatory filings, Burry's Scion Asset Management has taken massive bearish positions against two major AI stocks, Palantir and Nvidia. He purchased put options representing about 5 million shares of Palantir, valued around $912 million, and 1 million shares of Nvidia, worth roughly $187 million. Together, these short positions make up nearly 80% of Scion's entire portfolio, a strong signal of conviction. At the same time, he's placed call options, essentially bullish bets, on Pfizer and Halliburton, companies rooted in healthcare and energy. The message seems clear. While the AI party rages on, Burry is repositioning towards stability and value. What are put options? Let's keep it simple. A put option gives an investor the right, but not the obligation, to sell a stock at a set price before a certain date. When someone buys a put, they're essentially betting that the stock's price will drop. If it does, they can sell at the higher fixed price, making a profit. If the stock goes up instead, the most they lose is the small premium paid for the option. So rather than short selling directly, which involves borrowing and selling stock, Burry is using puts to cap his potential losses, while keeping his potential upside large if the market turns. It's a tactical move, and one that perfectly fits his risk control style. Why is Burry betting against AI stocks? In short, valuation. Artificial intelligence has captivated the market. Companies like Nvidia have soared to record-breaking valuations, with its market cap recently surpassing $5 trillion. Palantir, once considered a niche software player, has also surged as investors rush to tag anything AI related with premium pricing. But Burry sees a different picture. He believes AI stocks have become detached from economic reality, fueled more by hype than by sustainable earnings. He's warned before that excessive optimism, aggressive spending, and momentum-driven trading can create bubbles that inevitably burst. To Burry, today's AI enthusiasm looks strikingly similar to past market manias, from dot-com stocks in 2000 to housing in 2008. And if history repeats, many investors chasing easy gains could be caught off guard. Analyst and market view Burry isn't alone in raising concerns. Several market analysts have pointed to a trend of circular AI investment, where tech giants pour money into each other's AI ventures, creating an illusion of endless growth. For example, one company funds another's AI startup, which then buys its cloud services or chips, inflating revenue on both sides without necessarily driving real independent demand. This self-reinforcing cycle can lead to inflated valuations and distorted fundamentals. It looks strong from the outside, but as Burry knows, when investor sentiment shifts, the correction can be brutal. That doesn't mean AI isn't transformative. It absolutely is. But markets often overprice the future before the financial results truly justify it. What this means for investors. So, should everyday investors start betting against AI too? Not so fast. Burry's track record is impressive, but timing a bubble is notoriously difficult. Sometimes, markets can stay irrationally optimistic far longer than skeptics expect. For investors, his move is more of a message than a call to action. It's a reminder to look beyond the headlines, to check whether the fundamentals, profits, cash flow, and real innovation truly support the price tags attached to these high-flying stocks. A balanced portfolio focused on long-term growth, diversification, and realistic expectations remains key. And whether Burry's bearish bet pays off or not, his contrarian stance adds a critical voice to today's overheated AI narrative. Michael Burry has made a career out of seeing what others miss. His latest bets against AI giants like Nvidia and Palantir may turn out to be early warnings or premature skepticism. But one thing is certain. He's once again challenging the core of market consensus. Thanks for watching Big Breaking Wire. Stay informed, stay ahead. Don't forget to like, share, and subscribe for more global market insights.